Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your weekly technical analysis of Paris Milling Wheat and London UK Feed Wheat. I'll start with Paris Milling Wheat. It is stating the obvious here, as elsewhere in the grains, that the market had moved sideways to lower since from early July until mid-August. The problem here in Paris Milling Wheat compared to the other grain markets had been with two competing patterns vying for the market's attention. The first was a July to September triangle come wedge pattern, pointing lower, enough to be considered a wedge but not completely out of the triangle class. The second pattern was a late July, early September bear channel. In practice, discussing this became immaterial, as we saw the market reach the primary and secondary targets for the triangle as well as the target for the bull channel, and all had been exceeded. In this whole vying process, the market here, as elsewhere, constructed a new pattern. It built a mid-August to mid-October ascending wedge pattern that is highlighted in blue on my daily chart. In mid-October, prices dropped out of the ascending wedge pattern and pushed down through the long moving average, currently 346. And last week down through both the short medium moving average, currently 339, and the medium moving average, and that's currently 332. We are now below all the moving averages. By doing this, the market is negating what might have been supportive actions that are still live in the other wheat markets. So there were, as one avenue is almost tightly sealed closed now, there were two avenues for this market, though I am sure other will become available eventually. The first one still live, and is the straightforward move down from the appropriate potential targets for the ascending wedge pattern. Thus, a primary target X on the downside is in the 331 zone, whilst the secondary harder to reach target X1 is way down in the 296 even zone. Then there's a second avenue. The avenue is almost closed. It is for the whole of the July to date action being not just a loose type of V bottom, but a loose type of V bottom with an extension. Personally, I've always found this a little slack as a pattern, as it all pretty much depended on the short medium moving average, and I suppose the medium moving average as well. And there was to still manage to hold the market up despite their being tested. Just if we did see prices revert back up, well, then this second scenario, the loose type of V bottom and extension, suddenly looks a lot more interesting. So this brings me to last week's and this week's action. Prices dropped below all the moving averages and already reached the primary target X in the 331 area last week. The further move lower this week had, as I previously said, almost killed off the idea of a V bottom with extension, but it has opened the way for another possible pattern. Is a look at the recent action since August as a possible double top. It is a lopsided double top, admittedly, and there are elements which I am not entirely happy with, but it could just be a possible double top. This pattern is not available in the other grain market, so one must treat it as either a leader or an aberration. Hence, because of this, we may have a third way here. If it is a double top with a primary target X3, too far in the 321.5 zone, and a secondary harder to reach target X4 in the 306 zone. This week the market has reached the primary target X3 in the 321.5 zone and held. The holding has all sorts of interesting implications, not least of which is that the market has held yesterday with a combination of the following: a key reversal up, if only just, but also a combined bullish engulfing pattern and also a bull hammer, all three in one. It now very much depends on whether the market will follow on with this combination, up to the medium moving average perhaps, or not, and move lower. I'll be very interested to see how the coming week deals with this market. London UK feed wheat. From mid-July to the end of September, we had a shallowly bearish channel that morphed into a shallowly descending broadening wedge pattern, which morphed again in mid-August into a bull channel. This last one is highlighted in blue on my daily chart. In mid-October, the market made a weekly key reversal down that broke down through the lower bull channel line and started the next major action, this time a move lower. Prices additionally broke down through the medium moving average and long moving average, currently 272.90 and 268.90 respectively. This despite the long moving average being in the wrong place if we compare it to where the long moving average is on the other grain markets. The short medium moving average, currently at 263 even, which elsewhere had fulfilled the role of a catcher's glove holding up the market, failed to do so here, and dropped the ball almost in mid-October. And to extend the metaphor, the 50% Fibonacci line of the July 2021 to May 2022 move at 262.5, which I'd previously suggested might fulfill that role, with the one of the short medium moving average, which had failed to do so. Well, that has sort of held up prices until last week, when it was broken. So to quickly recap, the market has broken down through the lower bull channel line, leaving us here, as elsewhere, in other grain markets, with two avenues going forward. No doubt more will become available eventually. The first is a straightforward move down with potential targets for the break below the bull channel. In this case, a primary target on the downside was already achieved in the 269 zone, whilst the harder secondary target is to reach target X1 is way down below in a 239 zone. This leads to the second potential avenue. It is a possibility for the whole of the July to date action being a possible V-bottom with a V-bottom with an extension. Personally, this originally looked a very tired and sick version of even a bullish halfway hesitation. So I said 2 weeks ago, and I quote, take a big pinch of salt with this idea, but you never know, end of quote. Anyway, the door to do so finally closed last week. The first of the grains where such a pattern has completely failed to produce. What has all this taught us? Well, we're on the verge here of a further move lower, and the first in the frame has been the August low at 251 even. This was reached last Wednesday, but we have not followed on lower, just pulled up a bit. Below this August low, we have the 50% Fibonacci line of the September 2019 to May 2020 move at 245.10. And if that goes into the frame, so will the neckline of the small December 2021 to February reverse head and shoulders bottom, currently at 241.20. And if that goes in the frame, so will target X1 down at 239. Caution now, we're peering over the edge here of possibly a deep precipice. However, there is possibly, and I say just possibly, another way, yet another way I should say, for this market to go. If the August low at 251 even and congestion at 250.5 manages to hold, then we have the possibility, somewhat remote right now, of the July to date action being a possible double bottom. This is only being contemplated by me because since the market dipped down here on last Wednesday, we have seen prices pull back up. This is honestly the slimmest of marginal chances right now, but I might just have spotted something early, which would be nice. The next few weeks will be very, very interesting. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright ZE Tofpik and ADM Investor Services International Limited. And here comes the final bit.